to the ETF.com video series we're shooting here at Inside ETFs in Florida. I'm Cynthia Murphy, staff writer for ETF.com, and joining me today is Jae Yoon, Chief Investment Officer of New York Life Investment Management. You are in a unique position to offer interesting perspective in what kind of ETF trends you're seeing, both from the institutional investor side, as well as retail, and as well as an ETF provider side.
Yeah.
So what kind of ETF trends are really standing out to you today?
So at a very high level, I'm glad to be here at this conference. What I see is there's over 1,000 products that are factor-based in equity space. So there's plenty of products. I think where we could focus on equity side is maybe better tools to analyze and education for clients, RIAs, on how to invest in them, how to select them. Where I think there's an immense opportunity to provide solution to our client is in fixed income. So what I see is about 20 to 30 fixed income providers here at a conference this year. And we're focused here on providing better solutions, and so we see great opportunities in fixed income space.
Through Index IQ, you guys have launched a lot of fixed income ETFs recently.
Sure.
Is there a specific angle in the fixed income
Sure.
that you guys are trying to explore, expand?
Yeah, thanks for the question. Yeah, so in fixed income space, I think first we step back at the macro headwind. So if you look at the theme this year so far that we're hearing at the conference, people are talking about the rates, higher inflation, etc. So my fundamental theme is to own fixed income, core fixed income space using a passive strategy is probably going to end in some tears, disappointment. So especially in a core fixed income space, it's absolutely important to look for more active type of ETFs. So what we've done at the Index IQ is we looked at, and obviously we're very well established active fixed income shop. Mm-hmm. So we look at various different strategies our active managers use to generate alpha. And in the core space, what we found that were unique to your typical credit mortgage products is a momentum-based ETF. So we actually have active managers using short-term momentum signal to allocate between credit and interest rate to generate alpha in the core fixed income space. So in this space, we have an ETF called AGGP. We call it AGP for short. And what it attempts to do is to provide you, using momentum signals, ability to dial up and down in interest rates and in various credit or spread products to generate alpha above and beyond. And it actually has 2-year track record, and it's generated great returns on a risk-adjusted basis, not just standalone, so that's important. And secondly, as you add this into your portfolio, it's giving you a differentiated, diversified source of return, meaning it's a momentum alpha away from your traditional credit mortgage. So at a portfolio level, you're getting diversification.
As you look at the opportunity in broadening the access to fixed income, we look at asset flows and AGG, the ETF that tracks the Bloomberg Barclays Ag. Biggest, most popular, most liquid, all the superpower of the fixed income ETF world. Duration has almost never been longer than it is now. Yield has almost never been the lower. So you've never been paid so little for so much interest rate risk in the ag. And yet, investors love that fund. They keep going for it. Do you think the investors are ready to go more granular in fixed income and look beyond AGG?
Yes, so in this year, they need to. So for the first time in this economy, we're going to have the US Fed, the central bank, reduce their easing, They're not only raising rates, but they're withdrawing from quantitative easing. Not only US, but the rest of the world, net, at the end of this year, will be following suit. Mm-hmm. So now we have to start paying attention on rising rates, as well as we're probably going to break the 4% unemployment rate, which means you do have to worry about wage inflation. Mm-hmm. So yes, this is the year that investors should think beyond passive investing in fixed income.
And to touch on something we talked earlier, and I've also heard at a panel, the whole high yield. There's always a fascination with high yield. There's always the question, good time, bad time for high yield. Any insight on what we should expect from high yield?
Yeah, that's a great question, and I do appreciate it's a great excitement about high yield. Why? Right now you have one of the most expensive valuations in high yield spread, the tightest, not seen since 2007. So high yield is very expensive, yet we have an economy that looks like it's going to do fine for the next couple of years. So if you believe this, you have a dilemma. Do I own this extremely expensive asset class that may have a drawdown? Or do I leave, which means it's very painful to give up all that yield, that high yield asset class gives you? So what we've done, because again, we've got a well-established active fixed income shop, we took certain know-how on liquidity and being able to come up with a better way to capture an incremental income that will give you a nice high yield income, yet take out the riskiest, least liquid component of high yield out. So you get to enjoy your income, yet you will be able to take out some of the big drawdowns when the market starts to get more volatile. Okay. So it's called HYLV, V for victory, if I may.
High yield, low vol.
Yep. And it utilizes the low vol, marginal contribution technology.
Thank you so much for joining us. Again, I'm Cynthia Murphy here with Jae Yoon from New York Life Investment Management. And by the way, HYLV nominated for Best New Global Fixed Income ETF at the ETF.com Awards. So we'll find out in March if it takes the prize or not. So keep your eyes open. Thank you very much.
And thank you, Cynthia, for having me.